Sounds nice as your pillow.
yes, and the Doge pillow is like rare commodities. Like
No,
back when I
that's
was buying these
legendary.
up, they like the Free State Bitcoin shop sold it to me, and there was like they sold out, and then they got like some really shitty Doge pillows that looked all ugly, and they literally bought out all the Doge pillows on the internet, and then they're gone. There's no more. So this is like one of the
Buy
last.
low, sell high.
Yes, and my good friend Dr. Jared Tapp of he's an Arizona State University scaling researcher. He has like two of these, and I would have two, but he bought the last ones and he waved them out the car window as he's driving away, like to flip me off with them.
At
So that's kind
least
of the
you
story
got
of that.
one.
Yeah, at least I got
At
one.
least you got one.
Yeah, before they turned
Yep,
into nothing, right? So
exactly.
well, yeah,
All right. My
it,
video okay? I'm looking frozen on your screen.
yeah, you're popping in and out a little bit. Like right now, it's
That's so
good,
odd.
but it could just be the fact that I'm like scaling to, I'm just streaming everything, which um, I'll allude a little bit more to in a second. But
Let me make
basically,
sure I'm on my, one sec. I want to make sure that I'm on my hardwire network because I do have my hardwire network here.
yeah,
Let's
the
see, turn off.
the
Am I still
wonders.
on? Mic check.
Yep,
Yes, I'm still on. So I'm on hardwire.
nice.
And I've got a gigabit upload, so I should be pretty good on streaming,
Yeah, we're doing the
unless it
wonders
glitches.
of working from home stuff. I could see, which
Yeah, not my fav,
yeah,
personally.
you like the social
Oh yeah,
aspect of everything.
I love being in the office and actually working with our team and going and grabbing coffee and shooting the shit on crypto.
Yeah, it is good. I mean, good thing that we have like internet social now, right? We can do.
We do.
It's not as
It
good as
doesn't smell
everything.
the same though, man. I just can't smell you, Joel.
Yeah, the
It's just not the
problem is a
same.
lot of people. Like I take care of my hygiene, but there's some people I know who, especially in crypto, who I would not want
You
to
don't?
smell. I do take
Well,
care of
great
them.
then. But then that's part of my evaluation of who I want to be able to do business with and chat with. But if I can't smell you, I can't use that as part of my metric and criteria.
Yeah, can you? But like, how often can you really like smell it through the camera? Sometimes you can. That's
It's
the
that
awkward
bad, huh?
times. That's the awkward
Uh,
times.
That's when they're that bad.
Yeah. Well, hey, it looks like. Well, let me just test the Odyssey link because for those who haven't been paying attention, we are actually. I helped Naomi Brockwell, the one and only, do test out her 40,000 YouTube or Odyssey subscriber count or library/Odyssey
Wow.
subscriber count thing. Congratulations, Naomi. And I was there for her like maiden voyage live stream, right?
Yeah.
And yeah, that was pretty awesome. So guess what? Now,
Hopefully this is as awesome, if not more,
yes, because what happened
second
is
time around.
they offered like they're doing this limited live streaming thing, and they offered it to her because she's like one of the big fish there. And then I'm only like 74, 7,500 subscribers on Odyssey/Library. And
Mm.
so I wasn't cool enough. And so I joined her live stream and her live chat and just shamed the crap out of her, saying that she needs to bestow some of her white privilege on me to get me on the exclusive club and stuff. And now, guess what? They say that I
You've got a
can,
link.
yeah,
Now you can stream.
now I can supposedly stream. So
And here we are.
I'm going to recheck up on this little on this thing in a second.
Are we
But
live on YouTube now? I see the live
yeah, we're
tab.
live
I'm
on
not sure if
YouTube.
it's
Not many
extra.
people.
We are.
So,
Okay.
do you have a link?
Test the Odyssey
Ooh,
link
we're live on
because
Odyssey as well. So, do you have the links to share?
I do not, other than just your main YouTube link, but I guess I could click on this, but I might get some audio on my computer.
It's fine. Go ahead and
There we
do it.
go.
We're gonna hit the go live intro thing. We only have two people watching. They don't care. So
Live now. Okay. I send it over to the marketing team. They'll post it.
yeah, just post it everywhere. All right. So
All right.
hey everyone who has been watching this random chatter and stuff and wonder who the hell these people are and stuff. Sorry for being on Mexican time again. Circumcised outside circumstances, not circumcised, outside of my control. And guess what? It's time for the intro graphic, and then we'll go right into this. All right. So, hey everyone. Welcome to another episode of Friday. It's me, Joel Valenzuela, on Digital Cash Rundown, and I got with me a wonderful guest from, the crypto past, crypto present, and hopefully crypto future, Paul Puey of Edge. How's it going, Paul?
Doing well. Thanks a lot for having me, Joel.
Yeah, you rhymed
Let's
that.
kind of get the conversation started of all things crypto, Bitcoin, digital cash,
Etc.
DeFi, maybe even a little bit, et cetera. Exactly.
All that good
Lots
stuff.
to talk about. This industry changes faster than anyone can keep up with it, but we'll do our best.
Yeah, so if you're watching any of these gross centralized platforms, which thank you for watching. I'm not trying to hate, right? If you look in on the comments, on the description of whatever video this is, for example, YouTube, there's an Odysee live stream link that basically, if you have not heard of this, Odysee is a front end is the most popular front end, I should say, for LBRY, the LBRY, the decentralized content protocol, which in my view is like the only real serious decentralized YouTube or other alternative kind of thing. I mean, there's other ones out there, but it's the one that's like good. It's the one you can recommend to people.
This one has a good amount of users, like people posting content, watching the content. They've really got the market share of competitors to YouTube. So hats off to them.
Yeah, for sure. So when you basically, one of the big things they've been lacking has been live streaming. And it's hard to do live streaming in a decentralized way. And I'm still not sure how much they've figured out how to do that as far as like how decentralized this whole thing is. But I do know that it is linked to the decentralized blockchain, at least as far as finding the stream. So even though the stream might be done in a centralized way or something, I don't know for sure. Someone have to chime in. Yeah, there you go. So in the video description, as I was saying, you have a link to the Odysee stream. Go there, jump in the live chat, whatever. It says there's 6 people watching. There's actually double what there are in YouTube right now. So that's pretty interesting. So that's
thank you, Odysee, the listeners.
Yes, thank you. I know we're roughing it right now, but that is what it is. I like to, before we jump into everything, address this little thing down there by the coin tree. Once again, the wonderful Naomi Brockwell and team has created this thing called Cointree, which is like a link tree of all your links, but has your crypto donation addresses too. And through some magic and some friends and all that, we managed to get a super chat, an actual live crypto super chat out of it. And so if you go to cointr.ee/thedesertlakes, you can leave a message with a small donation or big donation, again, if you're going to big league me here. And then it'll pop up right on the screen here. So if you want to ask questions and I'm ignoring you in the free live chats, if you go start throwing me some coins, there we go. And I did get an interesting message here. Ooh, I did the interesting thing. We'll figure that out later. It says, I did get a donation earlier today that's not part of that. It says, hey, I just listened to the last episode. Can't wait till there's a platform integration with podcasting 2.0. It beats my favorite podcasters. Someone please tell Adam Curry about Dash. That's a lot of things to talk about. That basically means Adam Curry is like the pod father. They call him like one of the first podcasters ever. And he has this Lightning Network solution for podcasting that he's been promoting that basically lets you stream money to people by how long you watch the podcast. And it's a very interesting thing. The problem is you have to like run your own Lightning node and a bunch of stuff like that. So basically the comment was regarding, hey, when are we going to have other built-in awesome for podcasting crypto donation solutions that aren't like an ugly hack? So yeah, I read you. All right.
A little tough.
All right. Enough of all those things. We actually get a comment on the Odysee live stream thing here. First off, Clem says, streaming on phone with mobile data, video plays seamlessly well. That's awesome. And
That's good to hear.
Jiggy Tom, who works at LBRY, says, the live streaming is still centralized at this time, but we'll get it right in the long term. Well, I definitely hope for that.
That's tough.
And yeah, it's one of those things I can't even conceptualize how to do it,
Yeah, to get it truly decentralized is really, really, really tough. If anything, you can at least stream through maybe a few centralized servers, but then store it in the decentralized LBRY network for people to watch after the fact. I think that's probably your best hope.
I think that's the way it's going to turn out, right? But the thing is, Um, I can also imagine, like, what if people who run library nodes or servers, like that anyone can do, are a collection of centralized servers, right? But like a decentralized collection of centralized servers, and then
Well,
every
what else is decentralization but a collection of
exactly,
centralized servers, right?
and
That's pretty
so
much the
it
definition
just picks
of them.
a streaming server at random, kind of, when you decide to stream. So it's not like it could be just some random dude in Uzbekistan who's running your streaming server and
Hmm.
stuff like that. That might be a way of doing it. But anyway, I'm a moron. Let's talk about MicroStrategy, right? So
Right.
MicroStrategy has been the darling of crypto people ever since the whole institutions are coming kind of thing became like a mantra of Bitcoiners. And they bought a whole bunch of Bitcoin back in the day of like a few weeks ago or whatever it
Yeah,
was.
exactly. Oh man,
And then now they bought a whole
crypto
lot.
years.
They bought the dip. They bought a bunch more. What's your immediate take on that?
Obviously, they're sold on crypto if they go far back enough. And Michael Saylor is no one new to Bitcoin.
Mm-hmm.
He was a Bitcoin bear a while back, but even when you're a Bitcoin bear, you're a smart guy. You've invested in successful projects and companies, even including your own, and you watch the markets. And if
Mm-hmm.
you've watched Bitcoin long enough, at least you know since like 2016, 2017, especially if you go as far back as 2012, 2013, and even watching it, you'll know that it goes in cycles, and you know that those cycles are all exponential. Like you go exponentially up, and yes, you exponentially crash, but never as low as before. And buying the dip this time around is just simply looking back at history, saying, yes, sure, it dropped, but it dropped the way it normally drops on its way up to an exponential increase from previous all-time highs, with the previous being 19K. Us at 58K at peak is only 3x. I say this, only 3x. People would kill for 3x gains from on most of their stocks.
Mm-hmm.
But in the world of crypto, we don't wake up for anything less than 10x. And so we're looking for definitely a much higher gain. And a lot of people are expecting that. And irony is the expectation is kind of a self-fulfilling prophecy. If people expect that, that means they're going to hold through it and they're going to buy dips on
Yeah.
the way to much larger gains. And so, yes, I think it's like, yes, obviously, if you're sold on it, and you know that we're in a bull market on its way up to exponential gains, you'll buy these dips if you've got the cash for it. Fortunately, for some people that are all in on crypto, there's no cash to buy any dips, but many people do have those liquid resources.
Yeah, that's kind of interesting perspective on all this. Now, what I'm wondering is what happens when, first off, as you said, who has cash to buy these dips? Like a lot of crypto people are not ballers, right? They're not like tons of paper money around. They've already kind of thrown all their chips, put
Into
all in on
crypto.
crypto as it is. And so like the hardcore old school, real believers are already kind of in. And so now it seems like it's just the new people coming in and gobbling up all that crypto cuz like who can buy the dips now? Now, I wonder if how good of a thing. Obviously it's good for price action that you have big companies coming in. Now, how good is it for, the financial system of the future that's for the little guy and decentralized and all this stuff when giant companies are buying bigger and bigger pieces of the pie?
How good is it for the little guy? It doesn't affect the little guy, I think, at all. It's only to the benefit because the little guy that got in early suddenly saw value increase through the big guys coming in later. So I don't personally feel like it has any effect other than the network. So obviously we've talked about this. I don't want to go into this rabbit hole, but obviously when you
Hmm.
start seeing price increase, that does affect the amount of transactions that hit the network, that affects the fees, and that prices out people from being able to invest in Bitcoin in a self-custody manner. It doesn't inhibit someone from going into Robinhood and buying Bitcoin where they never really own anything, but it does prevent people from owning their own crypto, from holding it themselves in keys that they control.
Mm.
If you want to buy $10 of Bitcoin, you can do that on an exchange. You cannot do that and actually hold your own Bitcoin. It's unfathomable. It's not worth your money to pay the fees to own a small amount of Bitcoin. That's how it affects the little guys. But I think our positive take, because whatever you at least did have from an earlier point of view has increased in value.
Yeah, and on that note, we're talking about the fees and stuff. That's just a good point that a lot of people are starting to interact with Bitcoin for the first and only time in a completely off chain which is kind of to a certain extent like a fictional. They don't actually touch the
Yeah,
Bitcoin. They don't have the keys. They don't move it. They're just like, oh, I
right.
buy it and I move it around. I think I move it around. Isn't it great? And they don't quite have any clue what they're getting into. And that the kind of people that are willing to expose themselves to on-chain fees are either like the nerds who've been there since day one, or the big corporations that then buy a ton. They pay like a
Right.
$1,000 Bitcoin transaction fee, which is nothing to them, to just acquire this big pot, and
Right.
then there we go.
Exactly. And I think we've noticed that even in comparison to 2017. Now we're not at the peak yet. I don't fundamentally believe we're at the peak of this bull run.
Hmm.
But in comparison to 2017, I know in the middle and definitely at the peak of the bull run, we saw fees on Bitcoin really, really spike up. Like if I recall, in the 200, 300 Satoshi per byte in order to get into the next block. And notably this cycle around, fees have notably been lower. They're still high. They're still what many people would call unreasonable for the little guy, but they're not quite as high in comparison to the transaction volume that you see in exchanges relative to 2017. So if you look at the transaction volume that we had in 2017 compared to the transaction volume that we have now, we've got more transaction volume now than we had back then, but the fees aren't nearly as high. And I think what that's a sign of is the unfortunate truth that a lot of the interest is with a lot of large corporations that either just hold their money on an exchange
Hmm.
or are just one big transaction and they hold it. And we're seeing less actual on-chain transactions to buy and sell crypto. If you recall back in 2017, people still had the option, at least in a lot of countries, including the US, of using services such as local Bitcoins. And people underestimate how much transaction volume was going through local Bitcoins. It was actually it was a huge amount.
Yeah.
That has actually since been outlawed in a lot of countries, including the US. And so that's kind of gone underground. People are still transacting, but it's more the people Now it's harder to discover who your peers could be that you could physically transact. And I think that's probably caused the suppression in the on-chain transaction volume, which, yeah, makes the the price of the fees look better. But unfortunately, I think it's pushing a lot of the usage to off-chain custodial solutions, which honestly is unfortunate.
Yeah, I think so. And we're kind of seeing that with Ethereum a little bit too now,
Oh,
with
absolutely.
all
Yeah,
that
probably
stuff.
even more so with Ethereum. Ethereum went to obviously its fee bubble in 2017 due to ICOs for
Hmm.
sure.
And
The
cats.
interesting thing about ICOs, cats and ICOs, although they were you'll notice the fee spike in 2017 was volatile. Like fees would spike up when a major ICO was announced, and suddenly it took days for your transaction to get in.
Hmm.
Today, it's more constant, right? It's just this constant, like, damn, it's expensive, but constantly, and it's more expensive than back then. And so what we're seeing now is, at least in comparison to 2017, it is actual real on-chain data. It's
Hmm.
not that people are just buying Ethereum and holding it or trading it on exchanges. It's true actual utility. Otherwise, why else would the fees go up? And I doubt that a lot of that on-chain activity is people just buying and selling Ethereum. It's definitely people buying and selling a lot of the tokens, but
It's
then also the
Uniswap.
financial services. Uniswap to some degree, but we're seeing a lot of activity in Edge where people are trading into tokens with what we don't know exactly, because we just know what tokens people are going from and to, but what their actual end purpose is a little hard to determine based on what we would guess. A lot of that is going into DeFi. So, for
Hmm.
example, why would someone swap Bitcoin into wrap BTC? What other reason, right? Is to be able to use DeFi on Ethereum.
Of
Otherwise,
course.
you'd have no reason to put Bitcoin into wrap BTC. But there was a significant amount of volume uptick over the past couple of months of that exact swap. And so that implies, yes, people are putting into DeFi, likely either interest bearing or loans. I imagine if it's wrap BTC, it's probably loans people want to put. And I know I did this myself in smaller
Hmm.
amounts than I saw in total, but put wrap BTC into Ethereum, take out some dollars, pay off some credit cards at high interest rates with a lower interest coming from your crypto, and you didn't have to sell, no tax implications, yada yada yada, stuff we've heard before. But I
Hmm.
think that's showing the true use case, and I think this is the first blockchain that's actually getting true utility as a financial service, as a true financial service, not as a speculative asset.
Yeah, and that's something that I think people are sort of missing out on is, and there's a lot of criticism about DeFi, which some of which of course is warranted, of people are just using it for mad gains and stuff. It's just playing the lotto. It's the high powered lotto, not the low powered lotto of buy and hodl and then sell on an exchange kind of thing. But
Yeah,
beyond, and that of course always like leads the charge, right? But just the fact that people are using, say, Uniswap as opposed to an exchange,
Yeah,
even if it's just to make mad gains, and I don't care about my $150 Ethereum fee because I made so much more on this trade. As much as that's like a little disheartening for some people who are like purists, just the fact that it's not on a centralized exchange now, it's like I think
that's amazing.
too many people are, yeah, they're underselling the importance of that. It's like I think they're maybe overselling, like there might be some overselling of like all the other stuff going on in DeFi about like, oh, look, the entire financial system's being replaced when a lot of it's just crypto trades. But that's a huge start, right? That's a huge
No, it's a
start
massive
that,
start. And I do think that a lot of the financial system that we have through banks and other centralized financial services can't easily, if not at all, ever be replaced by DeFi. I'll
Mhm.
honestly say that. I think they're not; those services are not going away. But every nugget of service that you can extract, so for example, fully over collateralized loans, interest bearing accounts, trading of assets, whatever those assets are, not having a central clearinghouse to trade the assets, to some degree, maybe even insurance, which is what's enabled through markets, speculative markets, betting markets. All of that is just more money that doesn't need to be in the legacy financial system
Mhm.
and can instead be in crypto, because crypto as money is just a base level of financial services. You think of that as the very base level is hold money, send and receive money. That's very base level. How much of our entire financial infrastructure today would exist if that's all you could do with your bank,
Of
is
course.
just send money, send and receive? It would be a much, much, much smaller ecosystem of financial services. Like these companies wouldn't be as big as they are if that's all you went to them to do. If every company that existed only gave you PayPal services, send, receive, hold, it would be much smaller. The reason why those other services are so big is that, and that the reason why the dollar is so big, and many of these other fiat currencies are so big, is that is what is used for the higher level financial services, the stuff built on top of money. And so I think it's really important for DeFi to succeed because it's what gives us a reason to put money into crypto for reasons other than just send and receive,
Yeah,
which is what a majority of our money is held in the legacy system, is for stuff other than just send and receive.
which I think is a little funny that like the base, like Bitcoin does a bunch of things great, and like one of the first things that like but as a, I would say primitive is not the right word, but as a basic, technologically basic because it's send and receive, like literally that's what it does. Um,
Mm-hmm.
it's funny that that very basic first thing that crypto can do, oh, you can send it and you can receive it, is still kind of like the untapped use case,
Struggling.
right? Isn't it kind of
It's
funny?
untapped, although it's untapped. It's untapped, but in a way, it's also still not ironed out.
Yeah, exactly.
you know, it's still not ironed out. So it's one of the things that, once we iron it out, then it can at least open up more use cases. In the same sense, the financial services on DeFi aren't fully ironed out either.
Yeah.
The difference, though, is that I mean, it almost is a perfect mirror.
Mm-hmm.
Send and receive is ironed out on crypto, on Bitcoin, if you're willing to send a fairly large amount of money and wait a significant amount of time,
Mm.
right? Then it's ironed out. Then it works. You want to send, $100,000 and, wait an hour, then sure, it's totally ironed out. And that's still much faster than a lot of banking, centralized financial services. The same thing with DeFi. It's totally ironed out if you want to take out $100,000 loan. You want to take out a $500 loan? No, it's not ironed out. So really, the ironing out is really kind of hinged on the scaling. To
Yeah,
some
for
degree, the
sure.
UX, to some degree, the UX, but I think that's an easy problem to solve. It's not one that has even been that bad. I've used the user experience on, a product like Aave. It's
Mm-hmm.
far better than going to the bank. It's
Yeah.
already improved on the existing services. It's already orders of magnitude better than going to bank and taking out a loan.
Yeah.
So can we make it easier? Can we make it akin to like a Robinhood caliber, really simple couple taps interface? Absolutely, we can do that. But that's not, I think, the big issue preventing more widespread use. It's, yeah, can we get the fees lower?
It's funny because like this is where I become the crypto boomer, and I'm sure a lot of us are too. Of like I remember buying things with crypto, and like I bought, that whole thing.
Holy,
Like
can I scroll through my history of the
yes,
stuff I've bought with crypto? Holy
yeah,
smokes. But
like
yeah, no, go
tons.
ahead,
Like, but
continue.
that's people like us, but we're rare in the crypto space, which is strange. But it's funny, the average crypto person will be exposed, will completely shift over to DeFi, as in decentralized exchanges specifically,
Mhm.
before they will actually be buying stuff, most of their stuff with crypto. Whereas,
Yeah, and
yeah.
that makes yeah, exactly. You're totally right, and it makes in a way it makes sense because if you skip over send and receive as a utility for crypto and you go straight into
Hmm.
speculation, which crypto has always been a speculative asset, right? Bitcoin's always been speculative. If you go right
Hmm.
into speculation, then you realize that if speculation is a use case, DeFi is a layer on top of speculation.
Yeah.
It kind of is if you think about it. So, case in point example, the classic use case for DeFi is taking out an over collateralized loan. Why would you do that? Well, it's because I don't want to sell my crypto.
Hmm.
Well, why don't I want to sell my crypto? Because I'm speculating on it. I think it'll go up in value. And why should
Yeah.
I sell that versus take out a loan with it, use it as an asset? I've gained, I've gained some additional value in it, and I want to use that additional value as leverage to be able to take out some cash.
Yeah.
So it really feeds on top of the speculative nature of crypto versus send and receive, which doesn't at this point. So I think that's why the fit is quite there. They're both just financial services, send and receive, loans, interest-bearing accounts, but one sits a little bit better on the speculative base layer.
Yeah, and that's one way I've sort of come around in a different way of thinking about like the peer-to-peer electronic cash use case, where a lot of people outside of a trading environment, I've been a stablecoin minimalist. A lot of people, and of course this could be a controversy, you could completely disagree, which would be fun, but a lot of people keep saying like no one's ever going to accept crypto at their business unless we have like a built-in stablecoin so they don't have volatility and stuff like that. And
Wow.
yeah, well, see,
Well,
you're on my
so
side.
that's that statement is already false because people already accept crypto
Yeah.
without accepting a stable coin. So that in of itself is already false. Now, will everybody accept crypto that's a volatile asset instead of a stable coin? And I would say absolutely. We'll get to a point where everyone will accept crypto as opposed to a stable coin
Mm-hmm.
because at some point definition of stable coin will be very blurred.
Mm-hmm.
So to me, the definition of a quote unquote stable coin is a coin that is stable relative to some other asset.
Mm-hmm.
That's really it. What is that other asset? So wrap BTC is a stable coin relative to Bitcoin,
Yeah.
right? There you go. That's a stable coin. Is it stable relative to the dollar? No.
Yeah.
What's the dollar stable relative to? Well, it depends
Not
on your
much.
frame of mind. Well, yeah,
It,
it's stable relative to the amount of eggs you can buy in comparison to Bitcoin, right? So for the
yeah.
most part, at the beginning of the year and the end of the year, I could buy roughly the same amount of eggs. Bitcoin, not so true. Likely I'll be able to buy more eggs.
Yeah.
Likely I will be able to.
And that's
But
one of
yeah,
those crazy
stability is a very
things.
relative thing.
That's a crazy thing with like the merchant experience. Like, and I worked with a bunch of merchants because, I spend crypto. I don't really have fiat, other than like
Mm,
the pity $40 in my pocket when someone wants to buy crypto and they don't want to do KYC. I'm like, here you go. But like,
yeah.
it's, you're not going to get merchants to say like, okay, I already use fiat. I want to accept, I want to like accept fiat by not accepting fiat. Like, it's kind of like a weird thing, like to sell people on we're going to use crypto to make your fiat processing kind of more efficient through this weird complex system of stuff. It's not like a hard sell. Like people are going to go for centralized solutions. And one thing I've realized is it's not like, oh, I'd take this crypto if I could convert it into a USD based stable coin when I wanted to and then turn it back out. No, it's like it seems like people aren't just don't want to spend and use crypto who aren't into it. And oddly enough, in my experience, it seems like people want to buy what they want to spend crypto not because they just want to spend crypto. They want to spend crypto because they have crypto. And merchants want to
Right.
accept
It's
crypto because they
easier.
want crypto. It's
Right.
the wanting to hold the asset to begin with, and that's all you have of the asset that then prompts I want to spend it. So like the stablecoin thing kind of gets like
Correct.
that's like a trader's tool in my view.
It is a trader's tool, although ironically, I look at the situation that I'm in. I am very heavily in crypto and I have a limited amount of fiat.
Mm-hmm.
Now, I can go and spend the fiat and then suddenly I've just got crypto. Well, what do I do? Do I sell crypto into
Uh-huh.
dollars and then use it, via debit card, credit card? Well, there's a core advantage to doing that in the sense that I will gain some points, rewards programs that a lot of credit cards give you. Right? That's the thing I can't easily get by spending crypto directly, which is unfortunate. I really want there to be a reward system for spending crypto, because to that merchant, why not? Why don't they give me rewards? Because I'm saving them the fee of buying crypto, and I'm saving them the fee of receiving credit card transactions. So yeah, they should be motivated to give me rewards, but there hasn't been a good standardized way and a decentralized way of being able to offer that. And that's kind of the challenge, is that it's not baked into any of these blockchains. And since there's not a centralized company that can snap their finger and say, we're going to give rewards, they simply don't exist. So that's one issue. Take a second level issue. There's a lot of chatter going on from people that have quite a bit of crypto, and say you've got, 8-9 figures of crypto on, you got a bunch of Bitcoin. In theory, for your own life, depending on how extravagant you want to live, you don't really ever have to sell it. You could simply take out loans on it, right? 10-to-1 ratio. You'll never have to liquidate. And then all that crypto is still available for you to increase in value. So that starts to beg the question, well, if I can just take out loans on it, what is the loan I want to be taking out? I don't want to be taking out crypto, putting in collateral that's crypto to take out another crypto that's a volatile asset that will increase in value. I want to take out a loan that's easier to pay back. And that easier thing to pay back is dollars and fiat. So hence the purpose of that stable coin. If I'm going to deposit Bitcoin as collateral, what do I want back as the asset that I'm borrowing? I want it to be the shitty asset.
Yeah.
Because that's the thing I owe. That's actually a core purpose of stable coins, is to be the shitty asset that I can pay back.
Yeah.
And like, sure, I'll happily owe more money because of interest on a loan that's based in dollars. Because I already know the dollars are going down in value.
Yeah.
And so what? Go ahead and put interest on that. And so there's a limited shelf life to that product, obviously, because once dollars go away, you can't do that. But in the interim, that's far more interesting than actually spending the crypto. That use case. And that's actually kind of been a bit of a tug in the heartstrings of me, as a person that loves to spend crypto, and I still do it every couple of weeks. We've got people in the farmers market here in San Diego that take Bitcoin and other crypto and Bitcoin Cash and Dash, and I'll spend that with them, really as a talking topic, and help to promote it, and they promote it with other people. So it's a marketing thing.
Yeah.
Right. It's an adoption marketing thing. But for my own financial interest, it's not really to my benefit to do so, which is in a way a bit unfortunate.
Yeah, and it's funny because a lot of these things, like when you micro adjust your own self-interest, sometimes things can look different from when you macro adjust them. And so, like, for example, I have a lot of maximalist people who, when they want to have a clever thing to say, they just tell me, hey, well, why would you spend your crypto? Why would you do that? That's stupid. You spend your fiat. And I'm like, you have fiat? Why would you have fiat?
Yeah, exactly. Fiat. Exactly.
That's why I spend the crypto, so I can afford to not have fiat. Because otherwise, you have to have fiat because you need to spend something, or you have to have a way of converting it right away to get it. But if you just spend crypto, it enables you to not have a bank account, for example, not have that fear of being shut down or whatever, not have those restrictions, not have all that paperwork on that side, or you get kind of paid in freedom. And that actually does reward your life in the long term. That it's not like a micro adjustment of well, by spending crypto, I'm making this much, but if I did the fiat, the rewards points would be this much. It doesn't balance out in the short term, in the immediate. Yeah. But when you're looking beyond that, it does.
That's a good point. And there's times where I have needed to send somebody money, and they specifically requested Bitcoin, right? A large sum of Bitcoin. And I said to myself, well, I don't really have enough dollars to convert to Bitcoin to send them that. And then I have Bitcoin that I could just send them, but I don't want to sell it. And follow me now through the process that I had to go through to actually pay them in Bitcoin. I went and took out a loan. I deposited Bitcoin as collateral, took out a loan in USDC, and then had to convert that back into Bitcoin to send it over to somebody else.
That's messed up.
So ironically, so that was my way of not having to sell my Bitcoin, not take the tax implications of the Bitcoin, and also not have to borrow an asset that could go up in value, which was the USDC, right? That wouldn't go up in value. It's always going to go down in value. It would be weird to deposit Bitcoin to borrow Bitcoin. That would make no sense at all. Why would you bother to do that.
Mm-hmm.
So I had to now go through this conversion cycle, but now I was actually able to use Bitcoin as a payment mechanism. And this other person wanted Bitcoin, but it just requires so much more effort to do so. Um, it's doable, it's possible, but it's just kind of a weird use case and a weird cycle to go through. But that was, for me, the most financially beneficial process to take.
Yeah. Well, I mean, the more efficient these kinds of things get as well, I mean, I think that's going to be good. You'd mentioned something about like the tax implications and stuff, which is a great segue into the whole regulation topic, which of course
Mm-hmm.
the headline on that is about XRP. Ripple is
Oh
basically
yeah,
they keep on growing in
in the
the
news,
non-US parts of the world despite the US based
right?
lawsuits. So, give me your hot take on that and we can just dive in on that.
Yeah. So as soon as I heard about this lawsuit with Ripple, like, oh, they've issued an unlicensed security, the first thing that came to mind is, for everyone in the XRP army, perfect opportunity to buy the dip.
Hmm.
Um, I'm not necessarily someone that promotes the use of Ripple based on how they promote it. Like, oh, it's going to be the currency that enables these banking transfers, blah blah blah. It's the
Yeah.
rails for these large financial institutions like MoneyGram, Western Union. Not really what I see for now. It seems like a speculative asset. Some people do use it as actual money, which you can because it does have value. But the first thing that came to mind was Block One and EOS.
Of course.
They got charged by the SEC for, once again, issuing and selling an unlicensed security. That's almost copy and paste verbatim of what SEC is charging Ripple for. And what happened? Well, they'd already raised billions of dollars in their ICO and they paid $24 million in fees.
Hmm.
Barely a slap on the wrist. Almost certainly the same thing is going to happen to Ripple. I mean, what is the government other than a bunch of people? And what is it about a bunch of people that brings us together? Well, it's the common desire for money. And when you have a lot of it and people want it, well, you can give it to them in exchange for something, products and services. Well, guess what a service is? Not causing your company to go out of business is a service, right? Not taking your company out of business is a service. And Ripple as a company has the resources to buy out that service, to purchase that service from the SEC, just like Block One did. So my take is, yeah, it'll have a short-term impact on their price, which it did, and then the price quickly rebounded. And Ripple can make both good and shitty cases that this isn't a security. But in the end, regardless of what happens, is they've got pretty deep pockets. They've got a war chest that they can use to basically pay whatever fees the SEC imposes, and then continue on their merry way, much like Block One did.
Now, the question on that part is their entire reason they got in trouble was because they just made these tokens and they sold them as like a sole source of revenue, basically, basically acting like a security. And they still have a lot of these tokens. So after they get fined, do they get to keep on selling them?
Well, what do you think Block One does? And so they've got a whole bunch of the tokens. They also have a bunch of the money that they collected from the sale, but they have both tokens. They have both EOS tokens, and they also have Bitcoin. And so I think they're one of the largest holders of Bitcoin, if I'm not mistaken. So it's really not very different.
Yeah. So basically, it seems like they're writing the book on like how to get away with murder. Not really, but like it's a
They're
complex subject because ideologically, I don't really believe in the SEC to begin with. I think people should be able
exactly
to issue
buy
securities.
unlicensed securities.
Yeah.
Securities shouldn't have to be licensed
Yes, of
in the
course.
first place.
It's so, and also as someone who likes crypto, I like the precedent of government doing as little as possible. And it's like, wow, you can get away with murder. That's great. There's of course a little side of me that just like, man, do you mean more people are going to do these weird, possibly fraudulent practices and just because they know there's a price on it and the price is something they can afford if they scam big enough, kind of thing. Not specifically saying, I mean, well, here, let me just say why I think there's been some sketchy stuff going on with, XRP and stuff with Ripple. So obviously, they created this token. They created like all of it, and they're selling it to make money. As far as I'm able to tell, it doesn't do that much. Like the token itself doesn't do that much other than, give Ripple people money or whoever's holding it. They called it something. It was called Ripple. And then when they figured out that they might be sued in the future, they called it XRP and did this whole no, it's something else, which is a little bit dishonest if you ask me. And then yeah, we're here the present day. So I think that
Yeah.
that was a little sketchy. I don't know. What's your take on
I
that?
think it was. It's sketchy relative to what is what I say. I think the reason why people consider it sketchy is because they achieved, what is it, top 3 market cap on Coin Market Cap. They're one of the biggest cryptocurrency projects that had this model of
Mm-hmm.
issuance, where we just printed all of them, we own all of them, there's no mining, we issue them out. Now, whether there's mining or not was not even mentioned in your argument, right?
Mm.
Just the fact that they created a bunch of tokens and they sell them for profit. That's a whole bunch of other crypto projects. That's a
Yeah.
ton of other crypto projects. Now, why are they under the lens? Well, they're under the lens because they became big, right? And
Yeah.
the SEC likes to go after the big fish. So that's really, and then there's also a company that's quote unquote issuing it versus a nonprofit. But what does it really
Mm-hmm.
matter? Like the
Yeah.
SEC doesn't really separate whether or not you issue an unlicensed security, but whether or not you're a for-profit company or a nonprofit company. They'll take down nonprofit entities if they go and just create their own money and try and sell it.
Yeah.
So
Now the
I
nuance on
think,
that is
mm,
like if you're an ICO, you
mm,
are selling, you're selling an unlicensed security usually. And it's kind
mm,
of upfront that what you're doing is you're funding the company. And then, the token may or may
mm,
not do a thing. Whereas I feel
yep,
like the XRP token was not marketed honestly especially in the later stages when they tried to pretend it was separate from the company somehow, that it was a little bit, dishonestly marketed as a real currency with real use and real users and things like that, when it really was a vehicle to give the company Ripple more money, that's not a bad thing, but it is the kind of dishonest messaging in my view. I don't know. What do you think?
um, let me clarify that messaging. And I'm sorry, I'm going to try to make this quick. I've only got a
Yes.
couple of minutes. I got a kind of hard stop here. So
Yeah.
the messaging of, yeah, this is a real currency that has real users and has real utility. Really, that's a gray area. There's not like a line that you cross to say this
Mm-hmm.
currency actually has utility versus it doesn't. What's the definition of money? As soon as 2 people agree on a value and exchange it, it becomes money. So
Mm.
have 2 people have agreed on a value of XRP and exchanged it? Yes,
Yeah.
more than that. And therefore, it now has its own very minuscule amount of utility. Is there some amount of utility that you have to cross over before you're now not a security? No one's defined that. No one
Mm-hmm.
says how much utility you have to truly achieve, what the user base has to be, what the transaction volume has to be, what the dollar amount and volume has to be before you cross over and actually have utility. So that gray area is where they're sitting in.
Mm-hmm.
And because it's a gray area, they can make arguments that you can make statements like that and not necessarily be lying,
Yeah.
because people have. And yeah, they're bending the truth. But let's face it, laws are are built, not that they're built to be broken, but they're built with that level of ambiguity to make it such that you don't know whether or not you're breaking it. It's easy to break, but also easy to fall in between, fall within the lines.
Yeah.
And I'll honestly say that a lot of people do hate XRP and hate Ripple, and their consensus mechanism isn't as decentralized as Bitcoin, Ethereum, and whatnot. But as far as this SEC thing, I'm kind of on the side with Ripple in the sense that I don't think that they issued an unlicensed security. It might be, you might
Mm.
hate the hell out of the technology and the protocol, or even the people and the way they look like a big bank and the
Mm.
way they do business, all of the above. But the whole unlicensed security thing, if that goes down and actually takes down the company, that sets a really bad precedent for the rest of crypto. So I'll
Yeah.
kind of end it at that. Hopefully, people's takeaway is, yeah, go ahead and hate the technology, but don't, just because of your hate of the technology, don't promote the government go and actually try to regulate it, because otherwise you're opening up can of worms for the
Yeah.
rest of crypto.
What is your
Well,
absolute hard out on this as far as time?
time. I do have a 1 o'clock, so yeah, I've got to take off in probably 1 minute
All
at
right.
latest.
Well, tell
Yep.
people what to.
Last thoughts.
Yeah. Last thoughts. Great. Thanks for coming on. Thanks for dealing with this little bit of a bumpy ride as far as like figuring out all the different new live streaming stuff. Huge shout out to
Yeah.
Odysee for letting me live stream. I will be live streaming
Yes.
a lot
Thank you,
more
Odyssey.
now. Thanks for being on, Paul. Send people to where they can follow either you or Edge, etc. It's chilling time.
Best place. Yeah. So best place is go to our website edge.app. And from there, you can find our social media links, Facebook, Twitter. You can find links to myself and where I live in the Twitterverse. But that's it. And you can download the app right from there, buy, sell, and trade crypto, including Dash, Bitcoin and Cash, Bitcoin, Ethereum, XRP as well. But hold your own keys. Fundamentally important.
Always hold your own keys.
On-chain transactions.
All right.
Yep, that's it. Thanks a whole lot.
We'll see you guys next time.
Thanks, Joel.
And thanks for being on.
Thank you.